Have you got shoes? Please tell me you don't have shoes.
Brian,
Okay, cool.
They're amazing. Today we're doing couch chats from a bench at the Chiffin. It's our demo night 2018, and I'm here with one of our judges, Caitlin Iles, and she's the founder of Capital XX, and it's a venture capital firm that invests in female founders.
Correct.
And we're going to keep this so casual, so I really want to hear, we talked a little bit before about your thesis around investing in female founders, and I love that it's, I won't give it away, but I just love that it's based on facts. Can you run us through that and your reason for deciding that?
Sure. Look, I think anyone that's investing in startups, their primary role, especially when you're managing other people's money, is that you're there to ensure that they maximise returns. And really that's the corner of the room that I come from. So investing in female founders globally has proven to be very successful, but it's a business case that's not well known, and it's not well known because female founders have only got 7% of global VC funding over the last 10 years. And in fact, it actually went down to 2% last year. So things are getting worse, not better, but historically and globally, female founders have been shown to deliver 12% higher revenue, 35% higher return on investment, and 64% higher company valuation before an exit and 46% after an exit. So if we remove gender and we just say this type of founder delivers a better return, to me that seems like a blue ocean opportunity.
I think it's super important that you present it in such a way where it's a great opportunity and it's not just a charitable work.
Oh, no, that's not for profit.
Yeah.
This is very much for profit.
Absolutely. We talked about something really interesting before, which I'd love to dive a little bit deeper into. Neither of us like ostracizing men, and they've been so great to us in all of our ventures.
100%.
How do we, the conversation is hard for guys because they are having to be careful about what they say, and they're threading on thin ice, and they're it can be very quickly publicized in a bad way, taken out of context. What is the conversation that guys are having? Because I know you have a lot of those conversations, and how, and what can women do to make that more comfortable so that they're ready to step forward and say something?
So I think it's really important that we know that the main conversations that have been taking place are definitely not conversations that have been taken out of context.
Okay, cool.
Look at a Weinstein, rape, abuse, they're not taken out of context.
Correct.
They're the things that we're trying to steer away from. Guys are our greatest allies, right? And this is a human issue. It's not a gender issue. It's not a gender issue. And from some roadshows that I've been doing last year, there's definitely a lot of fear amongst men in, I think, all different industries as to what do I do and what don't I do.
Yeah.
And I think it's pretty simple, right? Do the same thing as you would do in a male type of one-on-one type of relationship, and assess a founder as a founder, not make assumptions based on their gender or where they come from or their cultural background or any of those things. So if you're in business, be there to assess business at its heart.
Tell me a little bit more about how female founders can get involved, and you've got a really interesting story about China. You live in China, in Shanghai.
I do now live in Shanghai, yeah. So Shanghai is a new chapter in my career. I spent 4 years in the Middle East and 2 years in Amsterdam, so this is kind of the third chapter in...
My favourite city in the world.
Amsterdam?
Yeah.
Yeah, it's such a good city. And China to me just seemed like it was going to be the greatest opportunity over the next 10 years. It's right on our doorstep. For me, my own personal investments, I'm very much looking at how can we take great tech and great products, like we were talking about before, into China. For anyone looking to get into China, my first piece of advice would be to read and understand the 5-year plan, because really what they're looking for is solutions that play to that. The government is very clear, as is the business community. These are the things that we're focusing on, and they're what we're going to follow. So
interesting. Like, what is Australia's 5-year plan? Like, we don't,
I'd like to see a really strong 5-year plan.
Yeah, we wouldn't even, the startup community here, I think, is actually quite disconnected to what the government see as like the roadmap for all of Australia.
I think the beauty of Startup Right is hopefully you're focused on creating a globally scalable business. And America and the Valley has always sort of been the cognitive next step. And there are challenges to going into China. I'm not painting this rosy picture, but there are some really significant opportunities to leverage there. You know, if you're in fintech, for example, if I was a banking institution, a traditional banking institution, who had a huge reliance on credit cards, I'd be really worried. I mean, you've got China where I can't use my credit card. Like, they will not accept it, right?
Mobile.
Everything's mobile. So it's all WeChat Pay, Alipay, and you see it operate so seamlessly that when I look at some fintech here in Australia that's still leveraging traditional banking systems, you know, I'm questioning that. It's been interesting. I've done a couple of pitch days since I've been back, and people that I respect immensely in the industry are saying, no, that won't work. And I'm sitting there saying, no, that will work in China. Like, let's take it straight to China. So Australia's always been a great petri dish and home of innovation and a great market to test in. But I'd encourage anyone watching to really open their mind to China and understand it and start learning and go over and do a trade mission, understand, you know, the government support. There's a landing pad and a whole range of great support over there.
China seems hard to get into because it's unknown and probably the language barrier as well. We talked about our really bad Mandarin before.
Very bad Mandarin.
How do you overcome the language barriers, and how much of a problem do you think that really is in today's Chinese society?
I think being a founder just means you're a problem solver. These are just different problems, right? So firstly, I think if you're prepared to enter a market and smile and be humble and learn and be open, you're already 10 steps ahead. And I wouldn't let those be the complete barrier to entering. I'd just say, they are challenges, much like how are we going to fix that code, how are we going to solve a payment problem, how are we going to go to market. But, you know, this is something we were talking about earlier. Maybe getting VC dollars is not necessarily the right step. If you can create revenue for your business, and you can do that through a partnership with an e-platform, you know, VIP.com has just come into the Australian market. So I'd look for partners that can help and just get on a plane, it's only 10 hours away, come over, do a trade mission, and there'll be lots of people willing to help. I think one way to sort of frame it is there's a greater risk of not being in Asia and not understanding what China as a market really represents.
We'll end up hanging out in Shanghai. Adrian really loves it, so we'll hit you up.
Love to see anyone in Shanghai.
We'll go on our trade mission.
We should organise one.
A lot of our audience are people that just have ideas, or they know they want to get into entrepreneurship one day. They're not maybe even there yet, or they've just recently started startups. How can they understand what you do, get involved in some way?
The important thing to understand about VC funds is before you can actually invest, you've got to go out and raise the pool of money, right? And that's a really challenging task. We've done it before, so we'll do it again. So we're raising the capital at the moment, and this first fund will invest in up to 500 female founders across Australia and into Asia and into the US. And because we invest very, very early, and we do so that we've got the chance, should, let's say, your business that we invested into continues to ramp, that we've got the opportunity to follow on rather than being priced out down the track. So it's like buying the ticket to the dance. We make sure that we're in there, right? But our model is not to see lots of different startups directly, me and my team. So we partner with accelerators, angel groups, universities, and we do our due diligence on them to make sure that they get high quantity and quality deal flow. And they essentially go out and they look at the market and they say no to 90%. So that's like our first round of de-risking from an investor's perspective. And then of those that get selected into their programs, we buy a little bit of them. And then if that business goes on to raise a subsequent round, and they can raise the first 50% from 3 independent investors. So no family members, no mates that you've just, you're at the pub one night and you come across a great business and everyone says, hey, I'm going to put in $50,000, $100,000. We do our due diligence on them to make sure that they're a representation of the marketplace. And if we're satisfied, then we'll follow on and on and on and on and on. So we'll end up at the far end with what looks like a traditional portfolio, but the way that we've got there is very different from sort of crystal balling and saying, you're a winner, you're not, you are, you're not.
And that gives you a lot more opportunities for the breadth of startups.
Yeah, there's so many different factors that make a startup successful or fail. I know from my own experience, having had a business in the Middle East, everything was going along swimmingly, and then there was this thing that no one saw coming in its size called the global financial crisis. So something that worked one day did not simply work the next day. So it can be market. It could be you and I are founders and we have a falling out or a disagreement about how we're going to run the business. The market can completely move. There can be a disruptor that comes in. And so our structure defends against that. And much like the risk of me saying it's too risky for me not to be exposed to Asia, it's too risky for us to invest just in one particular vein, because we saw the sharing economy come in and it was very disruptive, and then it sort of cooled off, and now we're going into AI and a whole range in crypto and all that sort of stuff. So for us, we've got our bets widely spread. That's not a scattergun approach. There is a very clear strategy behind it. It's not just, hey, let's throw a whole lot of cash in the air and see what works. We've got a little bit of this and a little bit of that, a little bit of agri, a little bit of e-com, AI, VR, IoT.
Thank you for today.
No, thank you for having me.
I'm super excited to